Good evening, Ira Epstein, and here we are with your Spider ETF stock market video, and this is your weekend edition wrap-up for Friday, the 25th of November, 2022. Hope you had a great Thanksgiving. I had family over, the house packed, food galore, and did my shopping today online. And then I watched TV, and I kept watching the local news in Chicago, trying to see how the malls are doing. And they said the traffic was certainly up, but they didn't see all the packages coming out. A lot of people coming in to hold things, look at things, and maybe they're hoping to go back and buy online because online accounts for so much now of the buying. We'll know by tomorrow, so it's going to be an interesting time. I've decided to stay with Amazon to just give an idea of what this looks like going into it. Next week, I'll get away on the weekly charts from that. We didn't see anything on price caps coming out of the Eurozone yet and what they're going to do with Russia on the price cap. They're coming. The question is, what's a high enough or low enough level? That's what they're arguing. Russia, in the meantime, President Putin has signed a presidential decree. He's going to punish anybody that goes into a price cap of any price. So they will not sell to them any product at all. We saw last week they were starting to shut off the energy that flows through Ukraine. We saw that. We see that they keep hitting Ukraine's every time they can get electricity or water going, they're shutting that down. This is the war plan from World War II. It's nothing unique about it. They use the weather to beat the enemy down, and that's what they're doing here. Problem is they get beaten down in the process too because you really can't advance and do very much into Ukraine with that. When we look at Amazon, does anything here look good to you? Not in my viewpoint. It still looks bearish. When we're taking a look here at the weekly chart, the swing line has still got patterns of lower highs, lower lows. To negate the downtrend, you got to get over 103.79 on a weekly basis. That could set up a bounce back to the 18-week average of 117.94. But if you don't take that, where might you head? Well, then you got to keep looking at the Bollinger Band. You hit it, you bounce, and then you go back. The next number is whoppingly lower. That's another, $9 almost lower at 84.68 because it will drop on Monday when the markets reopen. And momentum is embedding. It's getting worse. Now, embedding simply means that the slow stochastic readings have to have 3 readings under 20. You got one this week. You had one last week, and the week before you weren't there. So if you get one this week and you embed, that's not good. That spells bad news for the Christmas season. In KBE, this tracks the bank index. You're still coming up and away, all right? By the way, I think I have band index, KBW band. I think I'm going to change that to bank. I think I'd seen a mistake. I haven't seen in a while. XLI, higher lows, higher highs. None of you wrote me on that. You can see how the market just moving higher, not embedded. So it's a thrust. The thrust could culminate wherever the Bollinger Band is. You're into the first resistance zone that you've failed at in the past. When you get up here, you can spend a week or two over it, and then you seem to roll back. If it's going to roll, it happens this week. If it keeps going and doesn't do it, then it's a longer part of it, and I think then you open up the door for the upper Bollinger Band. On the energy sector, you have an embedded reading. Now, let's talk about this. Energy is running about, in the U.S., we're about $76 a barrel, round figures on our WTI. The Biden administration said that they would start replenishing oil in a band starting under $72. You're $4 away. If this falls very much, and I'm not saying it has to, but if it does, watch out. We'll test the floor of the U.S., and I want to see us replenish all that oil. There's so many reports that when we get out of this next round of the war in Ukraine and COVID, that there's going to be pent-up demand as the economy slows the inflation down. I think we have to have that oil back in our strategic reserves. Now, do I know? Am I smart enough to know the exact price you do it? No. But if the Biden administration holds where they're at, starting $4 lower, we'll start seeing if they're talking turkey or talking out of their ears, smoke. FXE, Freeport. Here's why I like this. You do know COVID is running rampant in China again. It's testing the new policies there. Freeport has also said they're not going to be able to meet the Chinese demand. they're cutting back the production to them. I got to tell you, I've been saying that I think copper is a $5 a pound commodity. I haven't changed my opinion. The market's starting to see what I'm seeing. GLD, with inflation down, with the dollar down, gold's come alive. This could be gold's turn. The market wants to move up, 168.24, 168.76. Next resistance zones, big time support coming into this market, 159.11 and 159.42. This is where the 18-week skirted, kissed the 200-week average and came up. That's 200-day average. The resistance all the way up there. In the gold miners, well, if the gold's good, you don't want to be bearish the miners, but they're at a key resistance point. They'd have to get a big jump here to get into the next levels, which are the 200 and the 100-day average. And I teach traders to never buy over Bollinger Bands. Doesn't mean I tell you to go short at them. I don't. In ARK, Kathy Woods keeps sticking her neck out. Now she's buying Bitcoin. She's decided this is the low. Look at how well she's done this year. So she's probably the thing not to follow this year. It's too late for me to tell you that, obviously, because her fund has gone into a nosedive crash. On the other hand, what she holds in time might have value to it, okay? Because if you look at her holdings, I am not a fan of owning Tesla here. I know many people are. I see too many new cars coming online. They're going to lose market share. Not saying they won't do fine and blah, blah, but are they the value they used to be? When you got more choices, the answer is no. That's how I have to view it. And Bitcoin, why do I want to own that? I mean, I don't know where the bottom is. Do you know where the washout point is? In Apple, all this news I'm hearing can't be good for Apple. I mean, Foxconn's, they're not paying people $1,400 to leave the factory. You know why? The troublemakers, they call them, give them 3 months. I think they said that's a 3-month severance. These people don't make very much money by our standards. But that's what's going on there. The manufacturing has been cut back dramatically as well. Here's Tesla. So I can make the argument, okay, at 161, but I think you want to go back and look when I was saying I have my doubts about Tesla. And the reason is I had gone a year ago to Arizona and I got to go in the Lucid and some of the other cars. And I came back and I said, Tesla has a big problem. Not because of Lucid, because of GM, Ford, Volvo, all the good Mercedes, all the top-notch manufacturers are going to have luxury, full luxury cars to compete head-on with Tesla. They don't have to beat Tesla. They just have to take market share away from it. And the market is telling you that is what's going on. Am I right or wrong? I don't know, but I can't imagine that suddenly we're all buying more cars, and I don't think most of us are buying an electric car so fast. You still can't drive it from here 600 miles. You got to figure out where's the station, how long is it going to take me to drive it. It's great for city driving. It's great for local driving. You can park it at night and charge it, and that's all wonderful. But I'm also reading some of the real costs of owning one, and I'm not convinced it's what we all think. However, there's so much fewer parts in them, it's got to be cheaper over the long run. Got to be cheaper to own one. In Meta, you're losing the embedded reading. There could be more to the upside in this market. If it stays lost, why not get back to that 18-week average? TLT, did we not say here? I know we did, and I kept saying, you got to be careful here. You lost the embedded reading. You lost it this week on the 18th. Bing, you should be making a run for the 18-week average of closes. Won't take much to get there now, will it? So that's what I do. I look at those, the different studies. Now, we have a lot of research that I think you should look at. And that research comes in the way of what we put out in our daily research from Linn. Now, you'll say, Ira, it's a lot of futures. Yeah, it is. And it ties into TLT, everything over the 20-year bonds, notes, that's what we cover. That's what we trade, okay? DIA, SPY, QQQ. What do you think you're doing? You're trading futures. What do you think you're doing in USO, GLD, SLV? You're trading the futures. They're all based on the futures contracts. So you read this, you see what the futures guys are saying about the futures, the options on the futures, the spreads, the backwardation, the contangos, which way they're going, what we're seeing, you put it together. How do you get this report? It's really simple. All you need to do at any point here is go to our website under free offers, take your cursor, move it up here as well. When you do so on the cursor, you'll see an icon, give it a click, and away you go. It's that simple. I'm Ira Epstein. You have a great weekend, what's left of it, and I'll see you all Monday.